The story of Rocket Lab is one of resilience, innovation, and strategic positioning in one of the fastest growing sectors in the world, the space economy. In the past year, Rocket Lab stock has surged by nearly 600%, reflecting investors' growing confidence in its business model, execution capability, and the potential of its upcoming Neutron rocket. But what exactly is driving this meteoric rise? In this analysis, we'll break down Rocket Lab's company overview, business model, its recent financial performance, the key growth drivers behind this rally, the macro and sector trends supporting it, valuation metrics, and lastly, the potential risks investors should be aware of. Let's start with a quick overview of what Rocket Lab actually does. Rocket Lab is a US-based aerospace manufacturer and space systems company founded by Peter Beck in 2006. The company is listed on NASDAQ under the ticker RKLB. While it started as a small launch provider with its Electron rocket, it has since evolved into a fully vertically integrated space systems firm. In simple terms, Rocket Lab builds rockets, manufactures satellites and spacecraft components, and provides launch services to deploy them. It's one of the few companies in the world capable of offering end-to-end space solutions, from launch vehicles and spacecraft design to on-orbit operations. Rocket Lab operates primarily through two business segments. First segment is the launch services, which includes the Electron rocket, the upcoming Neutron medium lift rocket, and HASTE, a hypersonic test variant of Electron. Electron is Rocket Lab's small launch vehicle used to carry lightweight satellites into orbit, while Neutron is a larger, partially reusable rocket being developed to launch heavier payloads. HASTE, meanwhile, is a modified version of Electron designed to test hypersonic technologies for the US defense sector, allowing experimental vehicles to reach extremely high speeds without going into full orbit. The second business segment for Rocket Labs is Space Systems, which designs and manufactures satellite buses, components, and payload systems for government and commercial customers. To someone who is new to space technology, the payload refers to the purpose for which the rocket or spacecraft is being launched, such as a camera, communication device, or scientific instrument that carries out the actual mission for the space vehicle. The bus and components, on the other hand, include the essential systems like propulsion, power supply, thermal control, and communication that make it possible for the spacecraft to operate in orbit and for the payload to perform its job successfully. Dual structure of launch services and space systems gives Rocket Labs a diversified revenue stream, something few space startups can claim. While the Electron rocket continues to dominate the small satellite launch market, the space system segment has become the company's main revenue driver, contributing nearly 70% of total revenue in Q2 2025. The company's long-term vision is to be the SpaceX of small and medium lift missions, offering affordable, rapid, and flexible access to space, while also supplying the components that make modern satellites work. Rocket Lab's financial performance in the second quarter of 2025 was its best yet. The company reported record revenue of $144.5 million, representing a 36% year-over-year growth and beating the high end of its guidance. Sequentially, revenue was up by 17.9%. Breaking this down, the Space Systems segment generated $97.9 million, a sequential increase of 12.5%, driven by strong demand for satellite components and spacecraft manufacturing contracts. Meanwhile, launch services revenue came in at $46.6 million, up 31% from the previous quarter, thanks to higher Electron launch prices and increased cadence. Gross margins also expanded meaningfully. The GAAP gross margin reached 32.1%, and on a non-GAAP basis, it climbed to 36.9%, exceeding the company's earlier guidance. The improvement was driven by a better product mix, higher launch pricing, and increased contribution from high-margin components. Rocket Lab ended the quarter with a 1 billion order backlog, with 41% of that coming from launch contracts and 59% from the space system segment. Importantly, around 58% of this backlog is expected to convert into revenue within the next 12 months, offering strong near-term visibility. However, the company is still in a heavy investment phase. Operating expenses stood at $106 million on a GAAP basis, primarily driven by research and development spending on the Neutron rocket. The company reported an adjusted EBITDA loss of $27.6 million, slightly better than expected, and a non-GAAP free cash flow outflow of $55 million, improved from $83 million in the previous quarter. Despite these losses, Rocket Lab's balance sheet remains strong. The company ended Q2 2025 with $754 million in cash equivalents, and marketable securities, bolstered by an at-the-market equity offering that raised over $300 million earlier in the year. Total debt stands at under $400 million, mostly in the form of convertible notes due in 2029, giving the company flexibility and time to scale its operations. Management has guided for Q3 2025 revenue between $145 million and $155 million and expects gross margins to further improve towards the 40% range. While the free cash flow will likely remain negative until 2027, the company is investing aggressively to prepare for Neutron's debut, a rocket that could transform Rocket Lab's financial trajectory. The primary reason Rocket Lab stock has skyrocketed is because of three powerful growth engines driving its story: the success of the Electron rocket, the rise of its space systems business, and the enormous potential of the upcoming Neutron rocket. Rocket Lab's Electron rocket is the world's most frequently launched small orbital rocket. It has completed over 69 successful launches, including a record 2 launches within just 2 days, a turnaround time unmatched in the small launch industry. This capability has made Rocket Lab the go-to provider for responsive and dedicated small satellite launches, particularly for clients who cannot afford to share payloads on larger rockets. The company is on track to complete 20 or more Electron launches by the end of 2025. Moreover, Electron's reliability and quick turnaround time have opened new opportunities with international customers. Rocket Lab signed its first direct launch contract with the European Space Agency this year and secured additional missions with NASA and other sovereign space agencies. These deals underscore the growing trust in Rocket Lab's launch infrastructure. While the world knows Rocket Lab for its rockets, its space systems division has quietly become the company's biggest moneymaker. This segment includes manufacturing of satellite buses, solar panels, reaction wheels, and advanced sensors, all critical for spacecraft missions. The recent acquisition of Geost, a US-based manufacturer specializing in missile tracking and infrared payload systems, strengthens Rocket Lab's position in the defense and national security sector. Geost develops advanced electro-optical and infrared sensors that are mounted on satellites to detect and track missiles or other threats from space. By bringing this capability in-house, Rocket Lab can now provide complete space-based defense solutions, not just launch vehicles and satellite platforms, but also the high-performance payloads that gather critical intelligence for national security missions. Geost's capabilities align perfectly with Rocket Lab's existing strengths, making it a prime contractor for defense constellations such as the Space Development Agency or the SDA Transport Layer and potential Golden Dome Missile Defense Initiative, a program estimated to be worth up to $175 billion. The SDA's Transport Layer is a next-generation satellite network being built by US Department of Defense. The aim is to create a resilient communication and data relay system in low Earth orbit, designed to connect sensors, weapons, and command systems in real time. The Golden Dome, on the other hand, is a proposed space-based missile defense architecture that would use hundreds of satellites equipped with infrared sensors to detect, track, and potentially intercept missile threats globally. Rocket Lab's ability to provide launch vehicles, spacecraft buses, and now payload sensors through GEOS positions it as one of the few companies capable of supporting these massive defense programs end to end. Through Space Systems, Rocket Lab has secured a $515 million contract to build and operate 18 satellites for the SDA constellation. These defense programs provide stable long-term revenue and serve as a moat against commercial market volatility for the company. The most anticipated catalyst for Rocket Lab's future is, of course, its Neutron rocket, a partially reusable medium lift launcher designed to carry payloads up to 13,000 kilograms to low Earth orbit. Neutron bridges the gap between small Electron rocket and heavy lift vehicles like SpaceX Falcon 9, while Rocket Lab's Electron can carry only around 300 kilograms, making it ideal for small satellites and research missions. Neutron's far greater capacity allows it to deploy large constellations or multiple spacecraft at once. SpaceX Falcon 9, by comparison, can lift roughly 22,800 kilograms to low Earth orbit, but it operates at a much larger scale and cost, leaving a clear market gap that Neutron is designed to fill efficiently. Neutron is central to Rocket Lab's long-term growth narrative, and investors know it. The rocket's development is progressing rapidly with Launch Complex LC-3 at Wallops Island, Virginia now fully operational. The company aims for a first flight by the end of 2025, though management has cautioned that the schedule is extremely tight and subject to minor delays. The rocket's Archimedes engine is currently undergoing full duration hot fire tests, and its manufacturing line is capable of producing one engine every 11 days. The first and second stages have completed major qualification milestones, and the company expects to integrate the flight hardware at the pad soon. If successful, Neutron will position Rocket Lab as the only reusable medium lift competitor to SpaceX Falcon 9, making it a critical asset for US defense programs that require two or more independent launch providers. Rocket Lab is already part of the National Security Space Launch, or the NSSL program, and has been tapped by the US Air Force to test Neutron for point-to-point cargo transport, a futuristic concept that could revolutionize military logistics. The NSSL program aims to ensure redundancy for the US military by maintaining at least two reliable launch providers capable of delivering national security payloads to the orbit. As part of this, Neutron is being developed to serve as a reusable medium lift alternative along with SpaceX Falcon 9, strengthening the nation's assured access to space. The point-to-point cargo initiative, meanwhile, envisions using rockets to transport military equipment or supplies across the globe in just under an hour, effectively turning space launch vehicles into ultra-fast, long-range cargo systems for defense operations. Rocket Lab's success is supported by powerful macro trends shaping the global space industry. The space economy, valued at around $600 billion in 2024, is projected to exceed $1 trillion by 2030. One of the biggest shifts is the proliferation of satellite constellations. Hundreds or thousands of satellites launched into low Earth orbit for communication, navigation, and defense. Rocket Lab's Electron and Neutron are both designed to serve this segment efficiently with dedicated launch flexibility that large rockets often can't match. Another key trend is the rise of responsive space architecture, the ability to launch and replace satellites quickly in response to emerging needs or threats. This capability is particularly important for national security, where Rocket Lab's agility and fast turnaround gives it a unique edge over slower legacy defense contractors. Additionally, the global push towards reusable rockets is reshaping industry economics. With Neutron, Rocket Lab aims to deliver reusability in a medium lift format using lighter carbon composite materials, potentially lowering launch costs and increasing profit margins. Finally, favorable US government policies and defense spending are a major tailwind. National security space budgets now exceed $64 billion globally, and initiatives like the NSSL and Golden Dome ensure long-term demand for Rocket Lab's technology. Rocket Lab stock has skyrocketed nearly 600% over the past year, largely because investors are pricing in the success of Neutron and the company's growing role in the defense and satellite manufacturing sectors. However, this optimism comes with stretched valuation metrics. Rocket Lab trades at a forward enterprise value to sales (EV sales) ratio of over 52 compared to a sector median of less than 2. This means the market is already assigning a massive premium based on the future expectations rather than current profitability. In essence, investors are betting that Neutron will become a major revenue generator, unlocking contracts worth billions of dollars in both government and commercial markets. If Rocket Lab can execute successfully, that valuation might be justified. But if the Neutron program faces delays or technical setbacks, the stock could see sharp corrections. Despite its impressive progress, Rocket Lab faces several risks that investors should understand. First, the execution risk. The Neutron program is both Rocket Lab's biggest opportunity and its greatest source of risk. A failed or delayed first launch could severely impact investor sentiment and compress valuation multiples. Second, cash burn and dilution. Rocket Lab is investing heavily in R&D and infrastructure, which means free cash flow will remain negative until at least 2027. The company has already issued new shares under the at-the-market equity program, which, while strengthening liquidity, also dilutes existing shareholders. The third risk is dependence on government funding. Many of Rocket Lab's contracts are tied to defense and national security budgets. Delays in appropriations or shifts in policy could affect revenue visibility. The fourth risk lies in competitive pressure. Rocket Lab's Neutron could compete directly with SpaceX Falcon 9, Blue Origin's upcoming New Glenn, and United Launch Alliance Vulcan, while Rocket Lab's vertical integration and smaller scale provide cost advantages. Competing with established giants will be challenging. Lastly, the risk is around the technical and regulatory hurdles. The company must obtain final FAA launch approvals, maintain safety standards, and ensure successful reusability tests. Any failure in these areas could result in delays and cost overruns. Despite these challenges, the Rocket Lab enjoys a strong competitive moat. Its biggest advantage is its vertical integration. Unlike many aerospace firms that rely on third-party suppliers, Rocket Lab designs and builds most of its critical components in-house: the engines, avionics, composites, and satellite subsystems. This not only reduces cost and supply chain risk, but also ensures schedule reliability, a key factor in winning government contracts. The company's acquisitions such as Solero, Geost, and planned Mynaric deal further strengthen its position across the satellite component value chain. Solero manufactures high-efficiency solar panels and power systems that supply energy to satellites, giving Rocket Lab in-house capability to produce one of the most critical and high-margin subsystems in spacecraft design. Mynaric, on the other hand, develops laser communication terminals that allow satellites to exchange data directly with one another at the speed of light. This technology enables faster, more secure, and jam-resistant communication across defense constellations and low-latency broadband networks. Rocket Lab also benefits from a proven launch record, giving it credibility among government and commercial clients. The Electron rocket's reliability, demonstrated through 69 successful launches, sets Rocket Lab apart from many newer entrants in the small launch segment. Its agility and responsiveness also appeal to national security missions that require rapid deployment. For example, in the Space Force Vector Haze mission, Rocket Lab delivered both spacecraft and launch, an end-to-end solution very few competitors can match. Finally, the strategic alignment with US defense objectives ensures recurring demand. The government's push for launch site diversity, domestic supply chains, and multiple launch providers directly benefits Rocket Lab's business model. Rocket Lab's journey from a niche small launch provider to a fully integrated aerospace powerhouse has been nothing short of remarkable. Its focus on execution, innovation, and vertical integration has allowed it to stand out in a highly competitive industry dominated by giants. The company is now at a critical inflection point. If the Neutron rocket achieves a successful maiden flight by late 2025 or early 2026, it could unlock a wave of new contracts and validate Rocket Lab's position as the second major reusable launch provider in the United States after SpaceX. That would justify much of the valuation premium investors are currently paying. However, the road ahead is not without risks. The schedule is tight, cash burn is high, and the company is navigating a capital intensive phase. But with a strong balance sheet, a $1 billion backlog, and a deep integration across launch and satellite systems, Rocket Lab appears better positioned than ever to capture the rapidly expanding space economy. The 600% rally in Rocket Lab stock is perhaps not just hype. It reflects genuine progress and investor belief in the company's execution capabilities. Yet at these valuations, the margin for error is razor thin. In the world of space investing, success is measured not by ambition alone, but by flawless execution. For Rocket Lab, Neutron will decide everything, whether it becomes the next SpaceX or just another ambitious name in the crowded launch market. Until then, Rocket Lab remains one of the most fascinating and risky growth stories in the modern aerospace sector. Thanks for watching. Have a great day.